You would never do business with somebody of which you don't have any governance whatsoever, know who any of the investors are, know where any of the money is not regulated by anybody in any way, shape, or form, and give them your money. Okay, it's kind of ludicrous. I actually am one stage thinking it's bigger than that, and that it's actually a state enterprise for China. And I think the crypto markets are being bifurcated into two trading zones, much like they want with the currency markets overall. They want a Chinese block and a Western block. And I feel like that is the battle that's playing out in front of our eyes, which is Binance and potentially Coinbase and a few others on the Western side. But, if you're a Filipino or you're a Brazilian or whatever, you use Binance. I mean, there's just nobody else to go to. And so they have a huge part of that. I think, and we've seen already with Tether, that even the Chinese have said, people were using Tether for money laundering. Everybody knows that capital flight in China leads to money coming out. And I think they've been using hedge funds as well. Something I don't really want to talk about, but I think that some of the largest hedge funds have been involved in that too. And I think Binance is involved in that. I think it's a way of taking money out of the Chinese system for the leadership and others, and also having control of the digital economy as it develops. And I think they know that. So, I think, so whether it goes bust or not, different, because we don't know who that backer is. If it's a sovereign state, it probably won't go bust. But you're giving your money to a sovereign state. It's dangerous, and we don't need it. I mean, this is what I don't get. Sure, I've got a Binance account. I can trade, just take my tokens off. It's all over and done with in 5 minutes. 5-minute exposure. But why do people... I mean, I got into this space because of what happened in 2012 in Europe when the banking system went under, in 2008, that we can self-custody assets. So that's the killer app of crypto. And yet everyone just goes, la, 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 I can't hear you. I'm just going to leave my stuff on Binance because I can't be bothered to figure out how to plug in a ledger. I mean, really, guys? It's inexcusable. Use them for trading, like an exchange. You don't store your futures on the CME. They get cleared and custodied in a regulated entity. Well, we can do it ourselves. So you can go there, trade, do what you want, use any counterpart you want, and then take it off. Simple. Because every time you're bringing on... by the next bull run, just by the magnitude of the adoption curve, right? You've got another 600 million people to come. You've got to educate them all over again. And humans being humans will make the same mistake every cycle. I've been in this since 2013. Yep. Every time an exchange goes bust at the bottom of the cycle, and everyone learns the same lesson all over again because they're all new participants. Again, I've kind of lived through this a lot, whether it's in crypto and traditional markets. I was heavily involved when long-term capital management, the giant hedge fund, went under. That brought down about 20 hedge funds at the time. And it was so catastrophic that the Federal Reserve had to bail out the banking system. The outcome then was anger, despair, hatred, hedge funds, leverage, opaque vehicles. Nobody should be allowed to invest. How dare you put your pensioners' money into it? What happened was actually regulation, and the size of assets in hedge funds tripled in 4 years. Then Bernie Madoff came. It's a scam. It's a Ponzi. It's all opaque. It's a terrible business. Nobody should put their pensioners' money into it. What happened? Regulation. It 5x'd after that in size to $3 trillion. So actually, the regulation is a good thing. I know a lot of people in this space don't like regulation, but you can't have it both ways. You cannot want to exist on-ramping and off-ramping from a fiat world and not have regulation. It's as simple as that. When that comes, which it will, it's just a matter of who wins the fight between the CEC and the CFTC. There will be an answer, and that will give everybody comfort in the space to get in. So I don't think it changes the adoption curve. It's no different than Mt. Gox going, which was actually bigger because it was a bigger part of the market. It would be like the equivalent of FTX and Binance going under at the same time. Now, that may be happening if Mike's right.
And maybe Coinbase. Maybe Coinbase,
right? It was everything. Right? I was lucky. I was with Itbit, which Chad Cascarilla, who founded Paxos, had started. And I was out of the whole thing, luckily. But, we saw it with Bitfinex as well. They were huge when they went, insolvent. So we've seen it a number of times before. It doesn't stop the space. It's usually just when the tide goes out, and that's usually when monetary liquidity is withdrawing from the system, you see who's swimming naked. And it's always, it's a really simple thing, Scott. You do not ever build a business of leverage on an asset or of a collateral that is 100% volatility. That's fucking insanity, because it will, probabilistically speaking, force you into insolvency, guaranteed. Now, that's why real estate has leverage, because it's very non-volatile. It's maybe a 0.5% volatility asset or a 1% volatility asset. This is 100 times more volatile. And idiots think every time, you know what we need to do is build leverage on a 100 volatile asset and then wonder why they blow up and go, really, guys? It's pretty obvious. So anyway, that's my learnings, that regulation will stop the leverage in certain ways, or reduce the leverage for in line with the underlying volatility, and sort out properly client segregation of funds. I mean, I was also caught up at MF Global, which was at the time was massive as a futures brokerage. It was bloody John Corzine, my old boss from Goldman Sachs, who was the governor of New Jersey. He stole the customer money to take bets on European government bonds. And he was a fully regulated futures brokerage. I mean, humans do this stuff. Give them anywhere a cent of money anywhere, and they will abuse it. Don't forget, we don't know what we're going to recoup from FTX. We have no idea yet, whether it's a donut or whether there's 40% to come back. We just don't know. Gensler's the person who's held this up. The CFTC would have done this a while ago, and they regulate exchanges. It's their bloody job. You know, I'm sorry, but he should take a lot of blame for this. And I know there's no point pointing fingers at each other, but people like Brian Armstrong has gone to them repeatedly and say, you need to sort this out. And he's like, we will sue you in retrospect, and we won't make a ruling on anything. And nobody's going to rule whether it's a fucking security or it's not a security. I mean, it's insanity. And I'm sorry, but he's got the blood on his hands of the people who lost money. And he needs to own some of this, because it was his fault. If there's anybody to blame in why people within the US got hurt, why did they go outside and use VPNs to use FTX? Well, because of the regulatory lack of clarity on the ability to do anything in the US itself. Now, at least Europe is a bit clearer. Singapore's great. Dubai's pretty good. Everyone's got Japan's getting their clarity. It's only India, really, and the US that's a total swamp still trying to figure this out. And that's hurting people.